How's everyone doing this morning? Hopefully you're doing good. Recording is up. Amazing. Fantastic. I love it. I got so much energy this morning. Sun is out. No clouds. If anyone's on the east side, and that storm has been killing it. So finally that's passed over me. And I actually see some sunlight outside. But if you've been following along the daily bias, I read that in there quickly. Obviously, number one, don't look at this as like, oh, I missed the move. You didn't miss anything, okay? If that's what you're obviously that's what you're thinking. Nothing wrong with that. But in the daily bias chat, obviously, I was looking for my preference for the higher time frame. Actually, is that this is the low of the consolidation. I mentioned that in the PDF group yesterday for that market review. I said on the 4 hour. If you go back and watch that, I said if you can get a gap here, touch the gap, and get another displacement. That would be my overall assumption that that's going to be the low of this consolidation range, and we're going to continue bullish for the month. If you really want that evidence that I said that, I'll go in and clip it later for you. But I'm looking at this as a very clean start to the market maker buy model, going up for the buy side here. So my overall anticipation for today's price action is going to be bullish, of course. And I'm not really going to be looking for shorts back into the gap, nor do I really want to be shorting it at all back inside the range. So that's my preference for today. As we go into the predictions chat, I'll quickly read that. I said, don't worry if it's actually running too far. I would favor if 930 dropped first, but let's see. It's quite close to the PM session high, so likely to burn that, then drop, and then replay. So that was sent out at 922. Here's 922 right here. So runs up, takes out the PM session high. I'd like to see it drop a little bit. There's a little bit of this consolidation range that if you can come back down, sweep that, form some sort of SMT, then we got some good targets obviously above us. We also have this last manipulation leg here that puts us up at the previous weekly high. So I'm going to annotate this. I do not think that we're going to get there today. If we do, this is going to be more of a consolidation reversal profile for the week, which normally does happen in summer months, but normally on NFP weeks of summer months. So it's not out of the ordinary or anything like that. But this is obviously major buy side, previous or current weekly high, previous weekly high, and then we've got both of these liquidity pools are available as targets. So I'm just going to mark out all of them. Actually, I'm going to mark out this gap more importantly. And we're going to keep those all up on the chart as we go in the 1 minute. That's what we'll be using. Already plenty of opportunities throughout the week. Basically almost every day. I did not trade Tuesday. I traded Monday, Wednesday, Thursday. So today, I have real no expectations for getting a trade, obviously. I don't want to be pushing it. But if it's there, I don't care if it's a win-loss, no trade. We're going to execute the plan as usual. So I know I think this is the first tape read of the week, but we've been doing market reviews over and over. So if you missed those market reviews, they're all posted up on YouTube in the YouTube unlisted link, and if you're in the PDF group, that market review from yesterday is also posted into the PDF group. So as you look at the 15-minute chart in terms of profiling today, you can look at this as a classic low number traction profile. Here's midnight right here, dropping down. The only thing that I'm looking at, if we go to the 15-minute chart, let's go over here. There's no major SMT at the lows. With the Asian lows, that's one thing. But as we go to the 1 hour chart and pull all this up, you actually see that there was between this low here and the inefficient and the swing low after it. I mean, it's not real SMT on the 1 hour chart. On the 15-minute chart, you can see it here a little bit better between these lows right here and these lows on YM. And then at the daily, so that's the daily low having SMT. But like I said, the 15-minute chart having the SMT at the daily low, little bit smaller time frame than I would like, but it's not the end of the world. And then in terms of 15-minute chart, obviously we would like to see it drop into a gap It tags it here, so technically that could be the that swing low, but I like it if 9:30 starts that move because that's the static open for our session. That's what I'm favoring. I did not review the trade from Wednesday. I did take a trade on Wednesday on this demo account somewhere. Oh, I think I just don't have my execution labels on. Right over here. So just scalping it back up to the buy side. I'll review that later in the stream if you want to review it with me, but it's not really the importance for today. Looking at this, after taking the equal lows, took a scalp on this. It didn't hold runners though because of 9:30. I like that. I love it. Beautiful. Yeah, I like that mentality. Taking it out before 9:30 just in case 9:30 does something weird. So since I'm bullish for obviously the higher time frame and for the session today, any SMT at the highs, just because you run out Nasdaq's PM session high first, and maybe ES or YM is weaker, is not going to be something that concerns me as much. Like over here, YM, ES are both below the PM session high. I'm not going to say that doesn't matter at all, but the fact that that's probably more consistent with the fact that it's a six sister, meaning Nasdaq is the strongest of the three, so it's going to run out the PM session high first. And we don't really look at this as SMT more than just a delayed buy side run. So we'll watch to see how it react. Obviously, if we start to get a change of state delivery and things like that with the SMT, then okay, now it starts to look like it could potentially drop. But like I said, I'm not looking for shorts today. So Maddie with the same exact trade. I like it. Are you viewing the SMT at major lows June 2nd, June 19th as a validation of the higher time frame SMR? When I looked at it yesterday, it was kind of weird. So like you got it. Where even am I? Yeah, these ones over here. Is that the June 2nd? Is that what you were saying? Oh, June 2nd also works. Yeah, that's fine too. It's a weird one, right? Just visually. But, I mean, I guess you're always learning new distinctions. You got first, I mean, I'd favor if this is left open as a breakaway gap, but let's just see how it's treated. You can call this your first presentation. It's not completely inefficient, so, but I'd like if this is left open as a breakaway gap. This is a 1 hour sibi, by the way. So actually, if we tag this 1 hour sibi, it very well may grab this. This is a premium array. This is going to be a discount array once we pop up into that. So it's, although I'd like to see it left open as breakaway gap, it may dig up into this tag, consequent encroachment, or 25%, and then come back, touch this, and then go back higher. So we're just playing it today. Obviously, we have no high impact news today. We have 8:30 orange folder, which is not really any huge news driver. So my preference for today is macro time. I didn't take any 9:30 trades on or off the stream here, so I'm favoring macro time truly as my entry and kind of just a scalp to end off the week if it lets me. I'm screenshot this, put it in a prediction chat, like I said. So starting to leave that open as a breakaway. Let me drink some water. There you go. like that. 5-minute order flow is already in line, so technically, if it's really strong, 1-minute PDA should be holding. So we're going to watch to see this gap here, and on the 1 hour time frame, there's also a buy side pool right above constant encroachment. So just watch CE here. So it should come up tag consequent encroachment of that. I don't really want it to trade into here and drop back down. If it's going to tag this at all, let it touch consequent encroachment first, come back into this, and obviously if that's paired with macro time, then discounted efficiency. This gap here is a little bit more inefficient. So this is I would classify this more as a first presentation gap. This to me is more of a breakaway. Either way you want to classify it is fine, but this is definitely more inefficient. This is actually more of a bisi. So I'll be watching that, how price wants to respect that. And obviously the order block now that's supporting it is also a major, where my eyes are drawing to. So right now my eyes are just drawing to this range, the order block, the inefficiency, and then this. So the 3 PD arrays kind of at this point to see would I be wrong, like if it displaced obviously through, if it displaced all the way back through this, I would flip bias, or not flip bias, but I would now probably be sitting out. But we got an order block, gap, order block, gap. This, like we said, should be left open as a breakaway. This is the inefficiency. So if it comes down, touches this, and especially if it touches the order block, and starts to get some strong reaction and starts closing through this inefficiency, the gray box here, then that would be great. Looking for a very strength guided longs going into macro time. And obviously into the buy set up here, and then the previous weekly high up there. Is that the current weekly high? Yeah. So it came down, touched the order block with the inefficiency. Naturally. This is a good time to do a mental assessment. How do you feel mentally? Do you feel any anticipation? Do you feel like you're expecting something? Do you feel your heart rate increasing from the price action? Are you glued in right now to see if you can get an entry as soon as it touches one thing? Did you notice that? Just let it pass by. But these little mental checks in between normally can help, if you're aware of them, kind of how you're doing within price. Look at that coming down, touching the order block, and now where's the price action closing? See, like if this candle right here takes out that swing high, or at least closes above the previous down closing candle, this one, they can come up, take the swing high, that's best. But the next 1 or 2 candles, if we can do that, then we should be pretty good for the buy setup here. Beautiful candle bodies telling the story there. Breakaway gap being left open. Like I said, CE of this gap is the first, not really draw, but miniature kind of tape reading target, where I'm fine if it tags this and starts to drop back into discount. I'm not going to be too worried. If it closes through that, then we're looking good. Let me actually go 15-second here. So watch to see if you can reuse this as a reclaimed gap. See how it comes up, displaces through, drops back into it. You want to see it start to energetically move higher. Especially if you can take out this high. There should be speed through this. Speed with closure. Come back down to the reclaim gap. And this reclaimed order block can be used as many times as it wants until it takes out the retracement high. So this high here starts the retracement into the gap. So now here's it touching the first presentation. And it's wicking through consequent encroachment. So now it's already, this is already the first sign of, if you're wanting the first sign of weakness, this is it right here. So first sign of weakness is tagging CE of the gap there. I don't even care if it's closing. I don't care what it's doing with this candle, but the fact that it's coming down and touching that, first sign of weakness. Still got plenty of time, right? It's only 16 minutes into the day, so don't start freaking out. And to me, if we look at the higher time frame, they're consolidating this right below that buy side from Tuesday's high. So to me, this just looks like probing. They're just probing the buy side here. Oh, like think about retail. You got a line right here, comes up really close to it, starts to drop away. Everyone's shorting this, especially if the 5-minute candle closes bearishly or something like that. But they're probing all of that with bias of liquidity. Let's see how this is reacted off of. Is there a VI in there that I missed? No, not really. Okay. I love it naturally. All right, it's gonna drop down now, just a little bit. Should flush these little lows and come down a little bit more. Let's see where this candle's gonna close. I'm watching the 1 minute right now on the other screen. There you go. I'll check out the lows. As someone who's FOMO into a lot of bad moves, 60 minutes into the day is a genius way to frame it. Not 60 minutes after doubling this if you're late. Exactly. Right. 16 minutes into the day. So there's that little drop I was talking about. I remember what I was saying earlier with this order block here being the last line of defense, kind of for my longs. So it wants to drop down with displacement through there. Is there a 15-minute gap? No. No 15, no 5. So you can start to potentially look for actually this swing low or this swing low to go. And you can notice how this is being used almost as inversion. Macro time is still here. So like I said, I really don't want to be shorting it today. Back inside the range. If it wants to go from buy side ERL back to discount in here, I could care less. To be honest, the amount of displacement we've gotten here is the first displacement we've seen like that towards the weekly draw in probably since maybe May 23rd over here. We got some of that starting to move up, and you can see obviously how large of a range now this market maker buy model was, completing it, and then we move back into a consolidation. So I don't want to be shorting back into the range. I don't really want to be doing other than targeting this current weekly high. And if we do close within this, or obviously balance it out and come all the way back down into there, then Monday I would expect to move out of the range. So we're taking out that order block there with displacement. That's key. Obviously 5-minute order flow. There's no, if anyone's using the ATM model today, you really don't have any indication of order flow flipping up until you take out that swing low. There'd be a shift, right? You got a gap there too. You could be using that, which it looks like it's about to take right now. And also a reminder today, if you didn't take a trade on Wednesday because of FOMC, if you didn't take a trade yesterday because of the bank holiday, don't come in today and force something that's not there. All right. Stick to the plan. Make the plan, trade the plan. Plan the trade the plan. That's what everyone says. So come into this and you have to be completely process focused. So if you don't get a trade, be happy the fact that you were disciplined. Same thing with if you lose and it was a good trade. Same thing if you win and it was a good trade. Don't try and get your PNL up because you didn't get a trade earlier this week. It's not the way you want to be doing it. Simply sit, watch, absorb it. And if there's something there, it'll pop out at you. The nice thing about trading, especially when you get the intuition about trading, is the good setups will be popping out at you. If it's not popping out at you and you almost have to convince yourself that it's a good trade, or you see someone else take a trade, you're instantly FOMO'd into that, it's probably not a good one. Most likely, it's 100% not a good trade because you're not actually focused on anything other than the outcome of it. So good trades will pop out at you. And I don't want, obviously, the energetic run coming into the session or the energetic run right now to make you market in or anything like that on demo. So we're simply here to just observe. And as it pops out at us, then if it's something we're willing to risk on demo, then that's one thing. We got macro time here. And like I said, if you go back to the hourly chart, this swing high here, and we have this consolidation range right below it. To me, that just looks like we're probing this. I want to see if there's SMT there. I don't have it yet. I'm looking at that 930 swing low for SMT. I do realize that the PM session high up there is too. So I'm watching that. Yep. Yeah, at that 930 swing low. Inefficiency. Yeah, no. Okay, SMT at the bottom is no longer there for the 5-minute, 15-minute. Still got it at the 915 swing low between all three. And I'm not going to marry my bias, but rather just, I'm not going to trade it if it goes down. If it drops down 300 points, I'm not going to trade it. So if it does flip bearish, I know we just tagged into that sibi right there. And if you start to get some reaction lower and take out and displace past this low, then I marked out 50% of the stealing range here. But if even if we're to get that far down post 10 a.m., time of day is going to be important here, then the rest of the session should be dropping, or it's going to be a swing to Z day. Don't want to be participating in that either. So I'm watching time of day here first to see, okay, do we continuously drop past 10 a.m.? If we do, it's either going to be a swing to Z day or a weird bearish profile in this kind of bullish expansion. Don't want to be trading either one of those, like I said. So at the latest, it can form the low at 10 a.m. if it's truly bullish. If it's not, starts to drop, my bias was wrong. We go back in later on and see if there's anything I could fix. You can see the 5-minute sibi is also forming. This is important here, right? And here. You would have liked if there's a gap there or some sort of change of state delivery you could use. Not really one there. Is Interstellar in here? You take the Vantix model today? I don't even know if there was one. I didn't even look at it. 34. Oh, actually, there was. You bet. Yes, sir. Let me clean some of this chart up. So we got this 5-minute inefficiency here that we're currently trading within. This would be of a bisi. So is actual true inefficiency. So if it's actually trading up into it, tagging this lower end, that would be a true inversion gap. Oops. Inversion. You do have a last manipulation leg you could be using. Really, this one's the only one. High, low, higher high. That sets in the high of the day with SMT. So that puts you down at London low and a little bit slightly past if you're looking for shorts. So now if it wants to go, you got no speed bumps really between this low and really there's no inefficiencies. This gap here is not inefficient, so you wouldn't even mark that out. You got that swing low here, 745, that's the inefficiency. All of this is pretty balanced, so I mean you can look at this as a market maker sell model down to here. Original consolidation, kind of trading back up, and then we're just trading back for the sell side in the range. But you've seen me trade swing to Z days before. So it's not like something that I don't do, but I think this is just one of those decisions that I'm making to preserve both mental and some of my own capital. Just obviously in line with bias, because if it was to drop back down and I get in short and it trades back up or even stops me out, to me it's just why would I risk that on a day like today? There's going to be a ton of people watching it today, right after the bank holiday. Come with this SMT as well. So approaching 10 a.m. We don't have any 10 a.m. news, right? They didn't put Trump on the board. Oops. Forex Factory. Nope. So at this point, I'm going to say it doesn't really look bullish at all. Peter is not holding. There's actually pretty clean displacement up here. And if we flush in here, then that would be the last kind of line of defense. The 15-minute chart, we got a gap here too. Which, are we dropping a discount now? No, we haven't. So this would be quite a weird profile for us to be bullish. As you even know, probably visually coming up, come all the way back down, taking the PM session low or the AM session low with no SMT. It's not going to come all the way back up into here. So it's either going to be a swing to Z profile or a New York Open reversal bearish. Neither of which of one I want to participate in. We'll still watch to see the end of the macro time coming to silver bullet, but then I'll head off after that. Or this gray box I have marked out is actually a 15-minute inefficiency. So I'm going to keep this annotated. Here's 10 a.m. So opening range been put in. So unless we have some miracle spike past the swing high, then I'm not looking for it. Where actually is the okay. So it's going up, trading this back into the 15-minute sibi. Tell I probably lost interest in it just by the tone of my voice. Taking out the AM session low there, 10:01. So time is something that's very specific. So when we call for elements of time to be precise on setups, it needs to be to the minute. To the minute, right? When I say 10:30 is a draw on time for most AM sessions, I'm talking about 10:30 exactly. 10:24 doesn't cut it. 10:25 doesn't cut it. 10:29 doesn't cut it. It is very specific elements of time that need to be lining up exactly when they're supposed to be. So the 10 a.m. window line there, when you have a static session between 9:30 to 11 o'clock, the 10 a.m. line is, if we're bullish, right, we want to see that open, low, high, close form within the session. This is 9:30 to 10. This is 10:30 to 11. So if, in a sense, we are forming that swing low past 10 a.m., now we look at this potentially as the high of that range, and now we're going to be closing and shooting for 10:30 to 11 o'clock on the low end. Rather, I would say open, high, low, close, 9:30 to 10, 10:30 to 11. So it's one of those tools you can use when you're either doubting your bias or you just want an extra confirmation in terms of time for the session. The only time that little static open, high, low, close won't work is if we're in a swing to Z profile, meaning we're going to come in, place the high up here between 7 to 10, and then between 10 o'clock to 12 o'clock, we're going to consolidate within the bounds of New York open high and the London low. That's where you're not going to see a lot of time precision, especially on other days like pre-NFP or pre-FOMC, things like that, like the session before FOMC. You may not get all of that stuff. So you're not expecting time precision, but rather just using price. Like yesterday, the short that I took yesterday was solely based off price action and price. There was a little bit of time there thrown in with 9:30, but you're not going to demand, oh, it's going to drop to 10:30 on a day like yesterday. So it's actually lethargically moving down here. You would have liked if all of this is very low resistance on a 1-minute chart. On a 15-minute chart, there are two gaps here and here, but as you drop on the 5-minute, it's pretty efficiently filled. Back to the 1-minute, it's efficiently filled. Like there's no gaps overlapping. So it should be kind of closing through this energetically. It's stalling out a little bit to fill those 15-minute gaps and come back into it. To me, this looks more swing to Z than like it's going to come all the way down to here. It may come down and tag the sell side here that I said is marked out, kind of that original consolidation for the market maker sell model. But like I said, unless it has some miracle spike back up to here and closes through, we're not going to get, I'm not going to get the move. It's come back up and wicking into that inefficiency as well. And nor was what you normally see at reversals is you gap down and then gap up. You get a BPR or an IFEG within that range. We don't see that here either, right? And you can look at probably other indices as well. Okay, well here on ES you got the low of right at 10 a.m. So you could have SMT at the bottom, but let's just watch it, maintain it. We got SMT as well here. Oh, actually, let me screenshot this. I haven't screenshotted it in a minute. Still just waiting. And this is why you should have parameters. And it's something that definitely comes with experience of what to use on different days. But you got to test stuff out. Day like today, yesterday, I said, okay, I'm preferably going to be trading 9:30 or the macro time, 9:30 or 9:50. Coming into it, I'm not going to flip bias. I'm going to have hard bias, given it's Friday with no news, and we're wrapping out the week. And those parameters will keep me safe. Something like Tuesday, coming into it, pre-FOMC. As soon as I open up the 15-minute chart and it doesn't look like the way I want, I'm not going to force something there. Compared to Wednesday, Wednesday AM session is different. It's each individual day is different, and you can look at, why was my bias? If you really go back and study the higher time frame, why was my bias this way on this day in a consolidation range, and the very next day it was the other way. And maybe you were right on both those days. You're right most of this consolidation range, and that's the skill of trading. The skill of at least ICT is the ability to find bias and the ability to rely on time to find setups, time-based setups, time-based exits. All of that stuff is extremely important. But the only way that you really test those things is by being wrong and by trying new kind of situations. You got a 5-minute gap here being tapped into quickly. That's probably going to be the last run. You can look at this to be like the silver bullet of that range. You want it to energetically run down, take out that swing low. At this point, all of them should be forming that swing low post 10 a.m. Yep. So that voids any expectation or possibility of it being bullish for the rest of the session up until after noon, literally after the 12 o'clock line. So I can sit out. I'm done for the day. I closed on my other live account on the left side. No trades from me today. We can quickly review the Wednesday price action if you wanted to. I think it was pretty textbook, to be honest. You got 15-minute liquidity pools down here coming into it. Drops down to 9:30, takes out both of those. Trades back up on the 5-minute and on the 1-minute. 5-minute chart, you've got inversion fair value gap being printed as we displace through there. And then on the 1-minute chart, as it's rebalancing an inefficiency and then leaving that inefficiency, pyramiding in on the 15-second chart, building the position and then taking it off at the current daily high above here and above the buy side. Or there was a gap, I think. Was there a gap? No, I think it was just targeting the buy side here. Targeting the buy side there. And pretty textbook standard stuff. You got the low forming here between what time and what time. You got the high forming here between what time and what time. So that was I don't think I reviewed this one. I didn't really plan on reviewing it. There wasn't much to look through. But that was that. Here's your last, like I said, the silver bullet, last ditch kind of effort. Run it out for the sell side. You'll see that taken out, and then we can wrap it up. Flux, have you thought of a bearish bias from last week? Bearish bias from last week. What do you mean? Like a bearish bias going into this week? Or you typed that wrong? I don't think I understand it. Bearish bias from last week. Like, if I really wanted to, you could take a little tiny scalp to that sell side here. But what's the point? Kind of just tape rated. So inefficiency there being traded into with the mitigation block, dropping down back into this order block. So you prefer if this order block is quite strong in its resistance. And now if we were to close through 50% of this, you could limit order in there, stop at that swing high. But I want to see displacement. We don't really have any inefficiencies forming. See, so wait, you wait, you wait. Looking at the 1 hour from last week's high, this week looks like a deep retracement. Yeah. I think it's a deep retracement back into the range, and I'd favor if we now continue to move up to this swing high for the rest of, the 2022 model. Exactly. So I'm actually looking at this as a bullish profile coming into up here. But if we are to drop all the way through this, then back stuck in the consolidation again. So this is the displacement I was looking for, taking out that swing low, market in there, stop at the high, and you look for the sell side at this point. On a demo. Obviously, I'm just tape reading it right now. Just a little spike down. Rebalance back up to this. Favor if this is left open as a breakaway gap as it runs this quickly. Let's keep him within this wick. Is there a 1 minute gap or something there? Oh, we just look at the sell side. Trading back into the inefficiency. Like I said, favor if this is left open as breakaways, the upper portion not filled. Then you should get speed through with closure right here. So it doesn't fill the breakaway gap. I'm watching this high now. Speed with closure. So this high here, this order block, actually, this should no longer be reclaimed. Order block here, digging into a gap, digging into a previous order block range, trades back up into it. Retracement low is then taken out. So this order block really should not be touched anymore. If it's retouched, we're looking for potentially this high to be taken out. See right there. So now it's already kind of weak, starting to consolidate. Or it's going to come back up to premium, take out this swing high. See? Filling in this gap as well. But anyways, this sell side down here, some 15-minute target and a 5-minute target. Pretty juicy. Pretty balanced price range in there. You can see the market maker sell model being printed. You still got the target over here. If you wanted that one, all the way down to this, I don't think that's going to be ran out by 12 o'clock. I think it's more of a swing to Z profile for today. We can watch, like I said, we can watch the sell side go, and then we'll be done for today. And if it climbs up past this, I'm also done for today. This should also be an intermediate term high, so an ITH rather. Whoops. Hello? Where did it go? There you go. So you got the last line in the sand is this gap here. Efficiency, the volume bounce. Thank you so much, my man. I appreciate that. I'm glad. Yeah, I mean, today is kind of boring in terms of the markups and no trade for me, so kind of just sitting here watching it, but there's value in these too, and I'm glad that some people can see it. I appreciate that so much. So here comes the sell side. If it can actually close bearish, hello? Keeps coming down and waking up. Keep coming down, waking up. Need an actual closure through a wick. See how it's keeps touching that? One of the strongest algorithmic signatures when you see a closure through an immediate wick like this. Boom. Now the sell side should go. Wick here closes through completely. If you get an immediate rebalance back up to that swing, it should flush down immediately and take the sell side. Nope. See, it's coming back up. So at this point, it's just consolidating now right above that swing point. So you'll most likely see it go. I don't really have... I can take this out. Yep. Okay. I don't care now. It just wants to keep coming back up, keep coming back. So it's consolidating right above that. So I thought it was going to go pretty quick, but let's just stall out. So anyways, that'll do it for me today. I was looking for longs, didn't get them. Watch it drop down with, I don't really think there's anything super clean, even in the shorts. Like as we look at the shorts here, in terms of an ATM model, if you wanted it, just to study. Swing low here, taken out. Got an inefficiency here at 952 being filled, but there's no clean breaker. So nothing there. And then this drop down here on a 1 minute chart, there's no gap. So even when you're looking for shorts, I don't think there's a lot of stuff in here that, at least in terms of an easy, low risk sell, you don't got a whole lot. There's advanced ways you can get in, like a soup up here, this little wick back up. But I don't even think that this one or this one is extremely high probability. And stream effect about to hit like crack for sell side. Exactly. But like I said, this is most likely a swing to see profile. So I want you to study after the fact where between 10 o'clock and 12 o'clock where we stay. If we stay within the bounds of both the high right now and the low formed at London session, that's exactly the profile we're looking at. If it happens to take this out, then this would be a New York Open reversal bearish. But I think, okay, so let's look at this from a performance perspective. Look for longs, didn't get any longs. Shorts were subpar and coming back inside the range after Friday. So either I wouldn't have gotten a good trade and have been forced, or would have been potentially stopped out if I did take the scalp over here. Like I said, I was just tape reading it. And we're just consolidating back and forth at this point. So green on the week, green today, based off performance and execution of the process. And then Monday, we're going to come right back into it and see if we can finish out this market maker buy model we're getting on a higher time frame perspective. All right, so I'll post this up later today. Obviously, if you have any questions, hit me up. I'll be kind of busy this weekend. I've got some stuff going on tomorrow, so basically the rest of today I'll be kind of busy, and then tomorrow, for sure I won't be answering any DMs tomorrow, nor will there be a backtesting review stream. Backtesting / review stream will either be on Sunday or it'll be on Monday. I'll let you guys know. All right. So stay safe. Don't do anything stupid as soon as it starts moving, as soon as I turn the stream off. But hopefully you didn't do anything stupid while price was going on here. But hopefully it was insightful and you got to learn a little bit more about either yourself or the market today. Obviously, like I said, pretty slow price action for what I was looking for. So nothing to capitalize on. And that's perfectly fine. All right. So take care the rest of today. Be safe. Journal, even if you didn't get a trade. Do the things that are necessary to succeed. And I will talk to you guys very, very soon. Peace.